Hello everyone. Welcome to the Financial and Stock Update channel. In today's video, we will analyze the U.S. stock market developments in the trading session on September 5th, 2025. A volatile session with many factors affecting, from employment data, interest rate policy to the UPS and downs of stocks. The overall picture shows a sharp divide in the U.S. market. The S&P 500 index fell slightly by about 0.3%. The Dow Jones Industrial Average fell nearly 0.5%, while the Nasdaq bucked the trend, edging up by more than 0.1%. This reflects a familiar trend this year, with technology continuing to be a bright spot, while traditional industrial and retail sectors remain under pressure. The main reason for the mixed market trading was the March jobs report. The number of new jobs created was only about 22,000, much lower than the forecast of 75,000. The unemployment rate also rose to a 4-year high, raising concerns that the U.S. economy was losing growth. However, on the other hand, this data also made investors expect the U.S. Federal Reserve, the Fed, to soon cut interest rates at its policy meeting on September 17th. This expectation immediately pushed the yield on the U.S. 10-year government bond to a 5-month low of around 4.08% and created momentum for growth stocks, especially technology. Among the stocks that stood out, Broadcom was the standout. The stock jumped nearly 10% after reporting better than expected earnings, with revenue from its artificial intelligence chips surging. Lululemon, on the other hand, disappointed, losing nearly 19% as sales slowed, and the company cut its revenue forecast. Tesla also gained attention, rising more than 3.5% on news of a proposed $1 trillion stock option for CEO Elon Musk if it hits key growth milestones. Other tech stocks, including Apploven and Robinhood, also rose sharply after news that they would join the S&P 500 this month. Looking at the weekly trend, the S&P 500 rose 0.3%. The Nasdaq rose 1.1% and continued to set a record high, while the Dow Jones fell slightly by 0.3%. The Russell 2000, which represents small-cap stocks, also rose 1%. Year-to-date, the Nasdaq led the way with a gain of more than 12%. The S&P 500 rose more than 10%. The Dow Jones rose nearly 7%, and the Russell 2000 rose more than 7%. These numbers show that money is still heavily concentrated in technology and market stocks. So what's next? With weak jobs data and falling bond yields, markets are betting on a rate cut by the Fed in September. If that happens, U.S. stocks are likely to continue to rally, especially in the technology sector. However, the sharp divergence between sectors and the risk of strong volatility remain risks that investors should pay attention to. The September 5th session ended with a mixed picture. Tech stocks were booming, with names like Broadcom and Tesla, while retailers like Lululemon were under pressure. This will be an important time for investors to consider their strategies, take advantage of opportunities in leading stocks, but also manage risks in the context of the U.S. economy, showing signs of slowing down. Thank you for watching the video. If you find the information useful, please support the channel by clicking like, share, and subscribe to update the latest analysis on global financial markets. See you in the next news.